Imagine a world where every trade you make is a guaranteed winner, where a master with decades of experience holds your hand through the volatile waves of the stock market,
And where the secret to retiring early is hidden in a private Telegram group. Sounds like a dream, doesn't it?
For millions of retail investors, this dream is the ultimate bait. Behind the polished suits, the glowing green profit screenshots, and the authoritative voices of stock market teachers lies one of the most sophisticated predatory ecosystems in the global secondary market. Today, we aren't just looking at a few scams. We are deconstructing the entire architecture of the black mouth industry. A multi-billion-dollar machine designed to turn your hard-earned savings into their exit liquidity. Put down your trading app for a moment. This is the truth about how those who promise to teach you how to trade are actually making their money from your losses. Act 1. The Architecture of Deception and the Theater of Prosperity. To understand the black mouth, a term originating from the Chinese Hei's Wei, meaning predatory market manipulators, one must first understand the psychology of the retail investor. The stock market is an intimidating, chaotic arena. Most people enter it with hope, but lack a system. This systemic vacuum is where the teacher or guru steps in. They don't just sell stocks, they sell certainty in an uncertain world. The first step in their routine is the creation of a theater of prosperity. This involves renting high-end office spaces, posing with luxury cars, and most importantly, displaying fabricated brokerage statements. With modern technology,
A simple inspect element on a web browser or a specialized profit generator app can turn a $10,000 loss into a $1 million gain in seconds.
They build a persona of a benevolent billionaire who simply wants to give back to the community. This is the first hook, the illusion of altruism backed by fake success. Act 2. The Evolution of the Trap, from Telegram to the kill plate. Historically, market manipulation was done via boiler rooms and cold calls. Today, it has moved to the palm of your hand. The process usually begins with the lure. You might see a Facebook ad, a TikTok live stream, or receive a wrong number text that leads to a conversation about wealth. You are invited into a wealth club or an inner circle group. Initially, the experience is strangely positive. There are dozens of students in the group, many of whom are actually shills or bots, praising the teacher's recent calls. This is social proof at its most lethal. For the first few weeks, the teacher might even give out genuine, low-risk stock tips. They aren't doing this to help you. They are fattening the pig before the slaughter. In the industry, this is often referred to as a kill plate strategy, adapted for the equity markets. They need you to move your capital from your bank account to your brokerage, ready to strike when they give the word. Act 3. The mechanics of the pump and dump and front running. This is the core of how they monetize your trust. There are 3 primary revenue streams for a blackmouth. The first is the front run. The teacher buys a large position in a low-liquidity small-cap stock. Once they have their position, they blast an urgent buy signal to their 50,000 followers. As thousands of retail investors rush to buy, the stock price spikes due to the sudden demand. While you are buying at the peak, the teacher is quietly selling his shares into your buy orders. You are his exit liquidity. By the time you realize the price is dropping, he is already out with a 20% profit, while you are left holding a bag of a worthless company. The second stream is brokerage kickbacks. Many of these teachers directed you to specific, often unregulated or high-fee offshore brokers. For every trade you make, the broker kicks back 30–50% of the commission to the teacher. They don't care if you win or lose. They only care that you trade frequently. The third stream is the membership fee. They charge anywhere from $500 to $10,000 for Level 2 access, or proprietary AI indicators that are nothing more than basic moving averages with a fancy skin. Act 4. The psychological siege. Why we fall for it. You might ask, if it's so obvious, Why do people keep falling for it?
The answer lies in the sunk cost fallacy and confirmation bias. Once an investor has paid for a course or followed a teacher for a month, they are psychologically invested in that person being right. When a trade goes south, the teacher doesn't apologize. Instead, they blame the evil market makers or short sellers, and insist that if you just double down or buy the dip, you will recover. They isolate the victim. They tell you that your family and friends don't understand the vision and that only the group can support you. This is cult-like behavior applied to finance. Furthermore, the blackmouths exploit the complexity bias. They use jargon, Fibonacci retracements, dark pool liquidity, institutional order blocks, to make the market seem like a puzzle that only they have the key to. It makes the retail investor feel small. And in that smallness, they seek protection from the very person who is robbing them. Act 5. The Digital Shadow. Anonymity and Regulatory Evasion. The reason these teachers are so hard to catch is the decentralization of the Internet. A blackmouth operation can be run from a laptop in a jurisdiction with no extradition treaties. They use encrypted apps like Telegram or Signal, where messages can be set to self-destruct. When the authorities finally shut down one wealth group, the scammers simply buy a new database of phone numbers and start a new one under a different name the next day. They use money mules to wash their profits, often converting stock gains into cryptocurrency to hide the paper trail. They are not just individual scammers. They are organized syndicates with marketing departments, tech support, and legal advisors who find loopholes in investment advice laws. They often frame their calls as educational opinions or paper trading simulations to avoid being flagged as unlicensed financial advisors. The secondary market is a zero-sum game in the short term. For every dollar someone wins, someone else must lose. The black-mouthed teachers have figured out a way to ensure they are never the ones losing. They have turned the stock market into a high-tech casino where they own the house, the cards, and the security cameras. If you find a teacher who claims to have a 90% success rate but still needs your $99 membership fee, ask yourself, why? If they were that good, they would be managing a hedge fund in Greenwich, not shouting in a Telegram group. True wealth in the markets is built through patience, index funds, and cold, hard analysis, not through the hot tips of a stranger on the internet. Protect your capital, because to the blackmouths, you aren't an investor, you're just the next harvest. Stay vigilant, stay skeptical, and remember, if it's too good to be true, it's because you're the product.